Well, good evening, X, and good evening, YouTube. Thank you for being here so much. It is Saturday night live edition of the Daily Factor. I'm watching my Longhorns get spanked by my good friend Brad's Georgia Bulldogs. Also, David Nicholas, the manager from uh, Blocks and X Funds, is a Georgia Bulldogs fan. Anyway, it's been a long night in Athens for the Longhorns. They're behind 35-10 right now. Now that's the bad news. The good news is I'm the only person in the world who's both a Longhorns fan and a Sooners fan. I'm a lot more of a Sooners fan, but I like the Longhorns because I live in Austin every week except for when they play the Sooners. But in any event, my Sooners beat Alabama today. My Sooners beat Alabama last year. My Sooners beat Auburn this year. My Sooners beat Auburn last year. My Sooners are 2 times in a row Alabama state champions. Everyone said, me included, that we were going to get spanked when we went to the SEC, that we were going to get killed. And to be fair, we didn't do great last year. We're doing pretty well this year. And we beat Alabama and Auburn back-to-back years. I mean, that's amazing. That is amazing. Our coach is a defensive genius, but we have no offense. He's a national champ, three-time national champion defensive coordinator. He's a stud at defense. But anyway, all right, guys. Well, how's everybody doing tonight? Now let's see who's here. We got Grumpy. We got Bank Account Central. Yeah, go Dogs, go Dogs. The good thing is SB ought to really like me because my Sooners beat Alabama, which helps out Georgia. Well, except for I was rooting it for Texas tonight, but whatever. All the rooting in the world isn't going to help Texas playing in Athens. This was Georgia's 9-0 anyway versus top 10 opponents. They're killing it. All right, guys. Let's get this show on the road. All right. We have 9 of you guys here. I'm surprised you guys are here that late. But we could do a little Ask Me Anything. Let me do my little show first and we'll see what's going on. All right. So just for the new people, what we're going to do tonight is the max factor. The max factor is my own proprietary metric that measures the risk-adjusted reward of these high-yield ETFs in a novel manner, that a way that other traditional measures, like you can look at yield, which is the worst thing to look at. Don't look at yield, or you can look at total return, and that can be deceiving too. So the max factor considers yield, of course. It considers total return. It also considers momentum in a kind of a novel way, and it also considers the relative safety or stability. We all want the highest yield possible with this just as stable as can be. Now, lots of times that doesn't always work, but still we can find ones that have a pretty good mix of stability and return. I mean, we want a high yield for sure, but we don't want a high yield at any cost. Let me put it this way. You have 2 ETFs that have a 50% total return for the year. Say one of them is, say one of them is, Misty, for instance. It's up 50% on total return on the year. Okay. Then you have another ETF that's up 50% on the year, and say it's FEPI, total return. Okay. Well, Misty during the course of the year was up like 100%, but was also down like 94%. Now, FEPI also had a 50% total return in this example, but say, it went from up 70% to down, to up 40% or up 30%, whatever, and then it settled on 50. So obviously we would rather have FEPI because you get the same result with a lot less headache. You don't have as much chance of getting a margin call. So that's basically the max factor in a nutshell. Hey, BR, congratulations. I was just talking about you. I don't know if you heard it, but did you see my Sooners? I'm sure you did. 2-time Alabama state champions, Oklahoma Sooners, number 10. Anyway, we have a linebacker whose number was 10, and he was better than Bosworth. I think. I liked him a lot better. Torrance Marshall. Anyway, I was going to shut my door, but no big deal. All right, so let's get this show on the road. Okay. Yeah, I waited till the game was over, BR. I didn't know if you'd be here, but I bet old David Nicholas is happy. I think he lives in Atlanta and he goes to Georgia games. All right. So where's the graphic? Where is the graphic? Gosh darn it! I know I thought I had it. Oh, I think maybe I just haven't clicked on it yet. I've been working on a lot of other cool stuff you guys might like. We can talk about other stuff later. Okay. So tonight we're going to do the top 20 most stable ETFs. Not necessarily the most sustainable. I mean, something could be not necessarily the best performing. You can have something that's too stable. I mean, like a bond fund, for instance, and even though it's super stable, it may be so stable it doesn't do what you want. But you can also have ones that are, like MST is a good example of non-stable. All right, so let's get FinViz up here so we're going to probably want to check these out as we go along. So let's introduce our contestants and look at the yield. So we have XYLG, that's from Global X. This one has an asterisk. It doesn't really get 22% yield. It gets 12. The only reason I keep it in here is people that have owned it for a year, that is its true trailing 12-month yield. Now, I don't know. It's not going to do it again this next year, I doubt. So just kind of keep that in mind. That one's on here, but it is stable, though. It deserves to be on here for stableness, but the yield's deceptive. In any event. Then we have TLTW. Now, this is a good one. This is based on bonds. The TLT index is basically the SPY of the bond index. Then we have IVVW. This is based on the IVV, which I believe is like the S&P 500. It may be exactly the S&P 500, but I get confused. It could also be like a total market fund, but whatever. It's the market. This thing follows the market. I just need to let's just look. I guess that's why we have Greenwich here. I think it's probably S&P 500. There's so many SPY surrogates. There's VTI, there's VU. IBB, yeah, it is the S&P 500. Okay. It is the S&P 500. And the IVVW is the iShares S&P 500 buy right. And buy right's another way to say cover call. Okay, so next we have HYGW. This is a high yield bond fund. Next we have TLTP. Now this one, what is this one? TLTP. Is this? I'm trying to think which company it is. It's not Curve. Lots of ones that end in P are Curve. I don't think it's Curve. Yeah, oh, that's right. Amplify. Now this one also has a TLT in it. Now TLT, just like TLTW, is the SPY. I mean, it's the SPY for bonds. It's the total return, 20-year bond fund. Well, anyway, these guys just sell premium on it and on its target. So it's only going to get 12%, but bonds aren't that volatile anyway. So in any event, this thing that's only 22 million under management. That's tiny. These can work for you, but you have to know what you own. These investments work better if interest rates are dropping. So that makes bonds appreciate, so keep that in mind. If interest rates are going up, this would make a lousy investment because the underline's going the wrong direction. So let's look back to 2022 if it was around back then. It wasn't. I think TLTW's been around for a while. I just want to show you guys how, you have to know what the underlying invest in. All of these things get upside or not based on what they invest in. So this goes back to 20. Anyway, this looks like a dog. What the heck? Anyway, you think about it though, interest rates have gone up. They started going up in late 2021 and 2022. They just recently kind of leveled out in 2025 and now they're turning the other direction. We'll see. Just stay away from that one. I mean, if you don't understand bonds. Let's see here. And I don't really understand bonds that well either. We have one guy in my Discord that I know of who's real into bonds and can tell you anything about them and actually doesn't like bond ETFs. He just buys the bonds themselves. He's a bond purist. In any event, TLT. Okay, so then we have YYY. Now this is a closed-end fund yielding 12.42%. We look TLTP is yielding 12.42. Also, what are the odds of that? I think that's a closed-end fund of funds. I don't know that much about closed-end funds. We had closed-end fund night the other night. Then we have XYLD. Now this is a brother fund to XYLG. Oh, here's the other thing. XYLG only yields 6% normally. I don't know how they must have had a special deal. I don't know how that happened. But it's not repeatable. The thing is, this is a good fund if you can deal with 6%, because the way they do that is they don't sell. It's kind of like a target fund. They don't give you all the money and they don't have to sell. It's like a target fund, so it gets more upside. But anyway, now XYLD is the grown-up version of that. This one pays about 12%. And doesn't get quite as much upside as XYLG. Now, XYLD, though, is showing a true number, unlike XYLG. All right, STRC. Now, this one's a beast. I mean, this one's a beast. Look, it's gone from 96.25 to 97.76. I think it's supposed to be like a stable coin is the idea. It's a preferred stock and it's based on micro strategies, but somehow it's supposed to pay a yield and be like a stable coin. I think they'll cut the yield if they have to keep the NAV stable. Right now it pays 12%, but the board of directors can cut the yield. Anyway, I don't know that much about it other than it's a beast. It always performs well on the max factor. Then we have QYLD. It's yielding 11%. And then we have SBAR yielding 11%. That's a barrier fund. They're kind of complicated. I don't feel like talking about it right now. We talked about SBAR the other night. FIAX. This is we were just talking about David Nicholas from Global X or from X Funds, excuse me. This is his baby. FI stands for fixed income. AX stands for alternative. So it's alternative fixed income. Then we have FTHI. Now this thing's one of the oldest covered call funds out there. This one and QQQX, and they're both pretty stable. FTHI, so that stands for First Trust High Income. Well, I mean, they call it the buy ride, but I'm telling you, it's First Trust High Income. That's how they got the ticker. And this was back when this was obscene income, like 12%. This came out around the same time as the Global X funds that also paid around 12%. So this has 1.7 billion under management. It's been around. It's paying about 8.6 right now. It's been around forever. It's based on the S&P. I mean, look, it's weighted just like the S&P, I believe. I haven't done a review on it, but just eyeballing it, that's the Max 7 right there. NVIDIA, Microsoft, Apple, Amazon. I guess that is the S&P, the biggest 7 stocks. Broadcom's not in the Max 7. But in any event, you guys get the idea. So this has been around since 2014. So let's check out some long-term performance. Look at this, the 10-year performance of this thing. And they say these things don't get upside. I mean, this is the 10-year total return. Is that right? No, this is just the 10-year NAV return. That's got to be total return. Well, let's just look at the 5-year. This over here is for sure total return. 5-year total return of 11.84%. That's NAV, and that's dividends. That includes that 8%. But wow, that's really good. That is a really good one. I'm starting to like that one more and more all the time. All right. So that's FTHI. CEFS. This is from Saba. It's a closed-end fund of funds yielding 8.3. You can see the stable ones don't pay the yield of the other ones. That's the trade-off. But anyway, JEP-I yielding 8.3 from JP Morgan. Sirloin yielding 7.72. This is senior notes. I heard about this one from Jay Pestrochelli on his podcast. Wealth managers use this one to get income. It's an income fund that's stable and has a great reputation. Let's go see, or at least according to Jay, I don't know anything about senior loans. I mean, I know what a senior loan is, but this is one they use in their own wealth management practice at Sega. I heard this about 2 years ago. So there's other ones out there too. There's closed-end funds that do. This is an ETF that does senior loans. There's closed-end funds that do senior loans. So now that's a monthly chart, but yeah, that's been around since 2014, paid about a 7.72% yield. Now the 5-year returns aren't that great, only 5%, about half of the buy right. That buy right fund from First Trust gets upside from the market. Bonds don't have much upside. I mean, they're super stable. They have more upside when the market, when interest rates go down. But in any event, all right, so that's senior loans. These aren't bonds anyway, but they're tied in just because of interest rates. All right. JEP-I, Sirloin, TLTI. Now, this one's an interesting one. If I had to get any of the TLTs, it might be TLTI. So I really like NEOS, and that's the NEOS product. Now, it only yields 6.2, but in any event. Then we have Riser. I heard about this one from, I don't know how I heard about this one. But this one's interesting to me because it's a fixed income fund, but it's like a hedged fund or a hedge situation. Most fixed income funds need interest rates to go down. Like I was explaining about any of them, that, TLTI, whatever, it's a bet on lower interest rates. Well, Riser is also fixed income, pays 5.7%, but it's inverse. It is a bet on higher interest rates. So I wonder if TLTI and Riser could be used together to eliminate interest rate risk, because that's the problem with bonds and interest rate type funds is you get a different kind of risk. Everyone has a pretty good handle on the market. You know it's going up and down, whatever, but a lot of people don't follow the bond market. And so to the degree that they follow the stock market. So it's a little bit more challenging to invest in. Now, Bond I, this is another SPY of the bond world. You have BND and you have TLT. Now, BND, I think, is just a total return bond fund. But let's look it up and see how many assets under management they have. Once again, though, this one is sensitive to interest rates, meaning it wants interest rates to go down, and that will make the value of the bonds go up. Okay, I don't know why I'm looking at monthly, but that's been pretty stable. I mean, it looks like it's gone straight sideways. I mean, over the course of a long time. Well, it's just been around since October. What? No. It's been around since 2022. Okay. And that was a good time to bring, well, not really. Anyway, whatever. So look at this. It doesn't have a 5-year total return, but the 3-year total return is 6.19. Just not a lot of upside in bonds. So this is this is based on the aggregate bond. They also have a bond ETF that's also the SPY of the bond world called AGG. For a long time, I thought it was agriculture or something, but I got corrected once. But it's the aggregate bond. Anyway, so let's see. Now, Bond I doesn't have many assets under management. That's fine, of course. I mean, it may, but I didn't look at it. But I more care about how big the underlying is. Then we have BND. So this is also a SPY of the bond world. And this thing it only has 142 million. TLT is the SPY. This is nothing. Let's type in AGG, the aggregate. One of these is huge. I thought it was BND, but maybe it's ag session than a countdown show. My countdown show, I'm short and to the point. I hope you watched that this morning. I try to get you guys in and out and make that, kind of just talk about what we need to talk about. Yeah, this one has 134 billion. This is the big daddy on the block. Anyway, just based on a basket of bonds. Let's see how it's done pretty well, but it's been out longer than the other ones. Yeah, been out since 2003. Okay, well, interest rates went down all the way from 2008. Interest rates, didn't they hit a low in 2019 and they were super low in 2015 and 2016? That's what I'd expect to see. Prices of bonds appreciated as interest rates went down. It's a tailwind for the prices. But then you can see right here, and then they really went down, I guess, after 2020. I mean, they started giving everyone free money, and that just pumped money into the system. But then what did they start doing in 2021? They had to start raising rates, and that's why the market turned around also. And that's what caused a little 1 year bear market. And so that's the problem with bonds. I mean, if you get in at the wrong time and interest rates rise, you could be in a world of hurt. So anyway, but that one's not even in the max factor tonight. We're just having a little study hall. Okay, SPUT, this is an S&P put right fund, pays 5%. And Devo, I know a lot of you guys like Devo and iDevo. Okay, so there we have our contestants. Why are you guys behaving over here? Froggy, you got everyone under control. You haven't had to kick anyone yet, have you? Brad's probably tossed back a few cold ones today because it's 11 o'clock on a Saturday night and his Bulldogs have been playing. I'm just joking, Brad. Will rise or lose value as rates? Well, let's go look at now. It's hey, Jackson, no bark, Jackson, no barking. In theory, yes, in theory, it's invert. But let's go look at that. That's a good question. But there's really nothing where if you need an income that I know of, if you need an income and rates are going up and the market's going to, it's like a hedge. There's nothing I know that works inverse. It's an interest rate hedge. But let's just see kind of how it's done. We've kind of seen what ag has done. Now, this hasn't been around. Mike Venuto is the founder of Tidal. And I think he's a partner in YieldMax, but he and probably a lot of other stuff too. He used to work for Direction, and he worked for some other ETF companies. But yeah, look at this. They released it right in 2022, which is the perfect time to release it. But so as interest rates have been getting crushed, yeah, it's been going up. That's amazing. Only pays 5.7%, but it'll go the other way as rates drop, or it should. I don't know. I mean, that's a monthly chart, so that's as far back as it goes. Let's look at the daily chart and see if they've already kind of topped out and turned around on the daily. Because, I mean, we've already had, one rate cut? And or was it two? We got one in October. Anyway, but yeah, there's been pressure and people anticipate the rate cuts are coming. So there's been pressure on this one, but all right. So let's get over here. I just wanted to check in and make sure the Froggy had anyone under control. Yeah, I agree with that. Let's go look at a Bitcoin chart, or let me get through with my deal. And then, let's look at it. I was just looking at the Bitcoin chart. All right. So, I mean, it's trying to work on a head and shoulders. It undercut the low Friday afternoon. That's not bullish. I mean, when you make a new low right in the close of the day. However, in the after hours, it rallied. This is a 30-minute chart, and then it's working on a higher low right now. So obviously, bears want to see this thing at 93. But bulls want to. Neutral people just like to see it grind here for a little bit. It is right on a high volume node. And that's what it's been doing. It's going below, going ahead, or ahead, and sticking right in the middle. So that's the neutral case. But the bullish case is to get it back over 100. Obviously, we have a big double bottom right there at 99. So anyway, we'll keep an eye on that. But yeah, that's been putting the hurt to a bunch of people. All right, so now I wanted to talk about what we were talking about, and that's the stable decks. And this is really more accurately called relative stability. So this compares the fund's price movement up and down, how much it moves up and down, and it compares it to the SPY, which is a proxy for the entire market. So this sirloin is 4.63 times as stable as the market. Man, that's stable. I mean, that's some stable stuff, but a lot of these are super stable. It only goes back, but it's measuring, this factors in trend. And so it's not measuring the all-time stability, but this quarter, this thing has been super stable, let's just say. And yeah, look at this. So, I mean, come on. It's gone from 41.34 to a high. You guys get the idea. Doesn't mean these can't go down. I mean, they can't become unstable because some factor hits it. But all right. So, but yeah, that's a good question. Okay. If there's any more questions, I'll take them after this. All right. So, Bondi, we've already talked about that. That's super stable. FIAX from X funds, 3 times as stable. HYGW. So you could see bonds or interest rate type things are based, and all 4 of these are, if they aren't bonds, they're related interest rates. They're fishing in the same pond, like I always say. Rise are inversely related interest rates, but super safe. XYLD, I mean, this one no one ever talks about, and to be fair, it doesn't really perform that well on total return, and it would never be on the normal max factor, but I mean, it gets stability points. I mean, 2.2 times as stable as the market. QYLD, I mean, I think there's better ones out there like JEPQ or triple QI, and I know they are because I've looked at them compared to this, but they aren't as stable. They have a little bit more swagger to them. But yeah, this thing's a beast. CEFS is 1.8 times as stable. We have JEPI 1.7 times, TLTP 1.74. Really, the ones that are a little bit less stable, I think, are sometimes able to get you more upside. I mean, I want yield, but I'm a frustrated growth investor, so I'm always trying to look for growth too. This stretch is amazing. TLTW is 1.6 times as stable as the market. YYY is 1.6, SPUT is 1.5, SBAR is 1. You can see these things are all, the least stable one is XYLG. But like I say, that one's messed up anyway. FTHI, I mean, that's impressive how long it's been out and that it had a 10%. I think it was a 10% average annual return over, I mean, that's pretty dang good. All right. So which ones are your favorites? Who do you guys want to win? I'm going to look at questions really quick here and make sure I didn't miss anything. Oh, we have a new commenter in here. I've never seen you in here, Souza. So anyway, thank you. If you, like I always say, if you have been in here before and I missed you, my apologies. But hey, what's up, Coach? We got a star in the house. Man, I want to give a shout out to Coach. He's been killing it lately. He had a video on yesterday that got 4,000 views. He had one on a month ago that got and it wasn't a video that he prepared a lot for. It's just kind of spur of the moment video, and he just killed it. I'd give anything for 4,000 views. The reason I had a big month last month is because I got one video and it had like 4,000 views, but Coach gets 4,000 views all the time, just killing it. Good job, Coach. Yes, YYY is I thought it was a closed-end fund that you know more about those than me, Brad. I'm sorry if I misspoke. It's an ETF. Okay. It's an ETF that is a fund of funds, of closed-end funds. All right. So, all right, let's see. Okay. Now what do you want to, you want to say triple or quadruple B? I don't even know what that one is. Well, I'll forget about it if I don't look at it now. Now I'm curious. That's some kind of bond fund, right? Kind of probably a high yield bond fund or something. An ETF with high yield bonds in it. Okay, I don't know. All right. So we can talk about that later. Let's get this show on the road. I know you guys are evidently not, Brad. We can look at all that stuff later after the show's over. But yeah, evidently not. Brad's asking, did CIE make the cut? And so far it hasn't. Again, remember, not financial advice. Consult a professional advisor. All right, let's get the show on the road. And also, yeah, I mean, the highest, this thing can't predict the future. We're just looking at the past, but it can tell us which way things are trending. So, all right, so here we go. Let's see who's number one. It's XYLG, but I'm the make an editor's choice, and I'm gonna drop it. I mean, the yield has nothing to do with the fact it's gone from 28 to 29. That's not bad. That's a 3.88% return. For these stable ones, that's pretty good. To get more return, you need to take a little bit more risk. So, but that's pretty good. I'm going to say I'm dropping it because it should only pay 6% yield. If it only paid 6% yield, it'd probably be down. It'd probably be down here somewhere. Not that it's not a great fund. So anyway, that's not first. That's going to be like 8th or something. QYLD is first. Now this is Global X. This never gets any love. I mean, these guys, let's look at, and I understand why, but, I do know people that have been happy with these, and people, it was before the other ones came out. There was people that were using these to retire. So I just want to look at the long-term performance. I mean, a 5-year return of 7.5. Look at the 3-year total return of 16. Now how many times have you heard me say that it's been the perfect storm, and other people too, that's been the perfect storm for these high yield funds the past, ever since they've been around, because volatility has been high enough to make these things pay more. So to bring in premium, but it hasn't been so high it's crashed the market. And all the crashes were quick, especially in the last 3 years. Well, not 2022, but anyway. But yeah, that's pretty dang impressive. Now a lot of people say I won't buy anything that hasn't recovered its pre-March lows. Well, this one darn sure has. And this one doesn't get a lot of upside because I believe they sell at the money options. And I think maybe they change their formula, but whatever they do, they don't, it's just not an upside fund. This is a yield fund. It's a yielding fund. And look at this thing. It dropped from, it's supposedly safe. Now, but it dropped from it is, but it dropped from 1884 to 14. That's a heck of a drop in April, but April was nasty. So 7.9 billion. Yeah. All right. Well, I think that one's, not for me. But anyway, XYLD, that's the same thing, up 3%. I mean, they are super steady. And you could see in the past, 6 months, it's been gone straight sideways. TLTW, now this one's 16% and you're tied into bonds. That's not the worst thing in the world. NAV's, doing as well as QYLD and XYLD. I guess you could get worse ones. And I had this one for a while and I sold all of it. But I bought it when the market was crashing or after the market was through crashing because I thought interest rates were going to be going down in the future. And I actually did really well in this one. It kind of surprised me. I didn't have enough of it. You never have enough of the winners on, but I had 6% or something. And when I cashed out, it did really well on, it was paying the yield and I was dripping it, but it had a decent return too. Anyway, IVVW, this is the editor's choice. This is editor's choice because I wouldn't mess with Global X. I mean, they're all right, but IVVW, you don't have quite the yield, but you get a little bit more yield and a little bit less NAV. Maybe this is an editor's choice. I mean, it's super stable. State Street, I believe it has a pretty low fee. Let's go look at IVVW. But that's editor's choice. Probably editor's choice is stretch. I just like covered call funds, but I just need to start buying some preferred stocks. That stretch is awesome. especially if I thought Mr. was coming back. It's tied into Mr.'s hopes. If Mr. keeps dogging it, I'm sorry. Gosh darn it, I forgot what I was looking at. Oh, yeah, IBVW. Let's look at the expense ratio and that kind of stuff. $200 million assets under management. Look at that expense ratio, a quarter point. Oh, I like this. They're using synthetics also, it looks like, because they have a derivatives offset. They probably use a little bit of, they probably use a little bit of leverage, because really for one of these boring funds that sells monthly options, guarantee you this is monthly options, they usually max out about 12%. So that's why I said this is editor's choice, because this is a boring fund with the low yield, with the low expense ratio. And this is pretty good. Now look at the fund flows. Somebody piled a lot of money into this thing. But it only has 200 million in it. I didn't realize that. Oh, it's only been around since March 15th. Yeah, that's editor's choice. That's not the worst looking fund out there. If you just wanted something that was, super stable and paid a decent yield, that's editor's choice. Anyway, then we have Devo. Devo is awesome. The yield doesn't get me going, but the NAV is up 4.69%, which is more than any of these other ones. And it makes sense when you pay less yield. But Stretch is second on editor's choice. Only had 1.57% NAV upside, which is not doing as well as the other ones, but it's not designed to. It's a stable coin. We'll see how stable it is if MSTR keeps going down. But from what I understand, they're going to take it out of the yield and not out of the return. I don't understand enough of it to decide. SPUT. Now, this one doesn't also pay enough to get me that excited. It's an S&P put right fund. TLTI paying 6%. To be fair, SPUT did have really good NAV. And to be fair, Devo does too. Devo has the best NAV here. Okay, but anyway, TLTP, Bondi, none of these really, FTHI, that one doesn't, these other ones just don't yield enough. Especially because they don't yield enough and they're getting less NAV. And some of them have a little bit less stability. But any of these, I'm sure CEFS could work at 8% yield, NAV's flat. Anyway, last is actually YYY, but it's just, last on this list isn't really that bad. They're getting penalized because they're negative on NAV, and it's not like they could be negative on NAV if one of them yielded 50%, and they might still be all right. But to be negative on NAV and yield, 5% when you have other ones, yielding 11 and 22% and are also killing it on NAV. All right, so that's our list. Hope you guys like that. I'll answer the other questions now. Let's see what else you guys have going on. All right, so I'm going to go from the beginning. I knew you watched the game. You didn't drink any cold ones tonight, did you? Man, I miss the days when I sat around and popped a cold one and watched the ball game. Mr. isn't a preferred stock now, yeah. But they have STRC though, right? Isn't that a preferred or a convertible? It's like a bond and a stock together. They have STRC, STRD. That's what I was referring to. STRC, STRD, and STRK, and some of them are hot messes that are all over the place. But this one, they're trying to do a stable coin. That, a lot of people say, I just want the NAV to go nowhere and pay a yield. This one might be the answer. It's pretty close. There's other ones out there that do it that are similar to, but anyway, all right. Yeah, go Dogs. So who do the Dogs have next week, Brad? Put the answer in the comments. Put the answer in the comments. Yeah, you did play a heck of a game. And to be fair, Texas sucks. They haven't had it. They beat Oklahoma and but they've laid some eggs. They don't suck as bad as we did that week, but they've had a few good games too. They're doing better lately, but Texas hasn't really caught their stride yet, in my opinion. Okay, what's happening on Monday? Well, based on let's do this really quick. You guys ever heard of something called Weekend Wall Street? There's a room in Twitter that has, it says, I think Weekend Wall Street, and I just put the link in there. It said IG.com. In Europe, people play the market all weekend long, all year, 24 hours a day. They use contracts for difference, I think CDSs or CDF or something. And it's like a futures contract. So they can actually buy this chart. They can, buy and sell and get access to indices on the weekend. So we can look at, oh gosh, hang on. So the only way, you can't do it in America, but you can sit here and I watch it all weekend, especially like during 2020, and during times of crisis. This thing will show, that the market is down, 4% over the weekend, because something's going on. If Trump tweets, or back in the day, if Biden screwed up something or whatever, you could see. I'm trying to think the tariffs, that when the tariffs were going around anyway. So this is a good source. It's flat right now. I've never done it before, but the bid-ask spread's kind of wide, I think. But they also have S&P and they have gold. It's a really cool source. It's the parent company of Tasty Trade. So I think right now it looks like a neutral open, but I think if Bitcoin goes way up, the bulls have their way with Bitcoin, and they do on the weekends a lot, then we'll probably get a nice green open, which is what I'm hoping for. But, we'll see. We shall see. But by the same token, if Bitcoin struggles and makes a new low, I'd say we're going to get a red open. You're just excited for the Monday open. Heck yeah, I hear you. I hope it'll be green also. I mean, I'm trying to prepare for a crypto winter. I don't think we're there, but we just keep, in case we are, and I don't think we're there, but in case we are, I wanted to just have some protection on. I'll take it off if crypto winter gets canceled. And it could, with one tweet, it could get canceled. Or one, so I don't have any inside information, but are any of you guys worried about crypto winter? Yeah, we need Bitcoin to go up. Heck yes. Audio skipping. Maybe I was going to say I'm not close enough. I'm getting a full signal and I have hang on, let me make sure my repeater's on. I think maybe this is not, now it's plugged in, but it doesn't look like it's on. Hang on. I'm sorry about that. Okay. I just plugged it in. It might take a while to connect and everything. I need to get my hair cut. All right. Well, remember back when I didn't cut my hair for about 6 months? Sometimes I'll do that. But anyway, lately I've been keeping it. All right. So hopefully the audio skipping goes away. Okay. CAI did not make the list, Marcus. We can darn sure go look and see where it is on the list. It's definitely one of the safer ones. Let's just do that. Where is this one? There it is. Okay, so let's just, I don't have a graphic, but let's go the second 20. Let's go after XYLG. Next, number 21 is SWZ. Then we have Omaha, GPIX from Goldman Sachs, Will, SCHD. I like it so much, it's on there twice. I need to fix that. AMAX. This is a fund no one ever hears of, but I think they sell covered calls. I think it's an old-time covered call fund. RSPA is a good one for diversification. It's an equal weight SPY. So you don't get like 7% NVIDIA. You aren't so heavily weighted in the FANG that if let's say AI winners here, something like YSPY is going to get murdered because it's based on the SPY and it has leverage. But something like RSPA will hold up relatively better. In any event, SPY is a great one. XV, that's a barrier fund. That's the brother fund to SBAR. And It's like it's a fund that bets on the market, but it has a big cushion. The market has to lose more than 15% for the fund to suffer really any ill consequences. It's what they call it's like a buffer fund, but it still manages to pay a decent yield. So it gives you real steadiness. SPIN, this is an S&P old time covered call fund, I think. Or no, this actually, okay, this is State Street, but it's not the State Street we looked at the other night. Remember the other night I showed you the State Street sector funds. There's like 11 of them. Well, this is SPIN. It's State Street, but it's but it's been around since before. I think this came out first, and then they brought the sector funds out. It's just a SPY fund. So this would compare with IVVW. This is State Street's version, and IVVW was that BlackRock's version or iShares? Maybe that is BlackRock. I just think that IVVW looks pretty dang good. Now, to be fair, though, this one has recovered. Almost recovered. It's only 8.46. That IVVW, pays a lot better, but I don't think the NAV looked as good. I don't remember anyway. That's kind of the way it works. All right. So let's go see what the other ones are. CAIE's on here somewhere. These are all still more stable than the SPY. iSPY, SDTY, that's one no one ever talks about. YieldMax fund, and they do the same strategy as T-SPY. They sell daily options and they're uncapped at night. They don't do anything overnight. They just come in the morning, write an option. I think they covered calls or puts. I'm trying to think how they do it. It doesn't really matter. It's all the same deal, but I think they're covered calls. They write an option and, hope the market goes up. If the market goes up, they make money. And they also make money if the market goes up overnight because they get full upside and then they don't cap till the next morning. Anyway, then we have WDTE, but this one's been doing well lately. This might be the editor's choice. The only reason it didn't make the list is, it has negative NAV, and there's ones out there that were doing a lot better on NAV, and NAV's a big part of the equation. Anyway, WDTE, that's from Defiance. This thing has turned into a Target 30 fund. They filed prospectus changes multiple times on this. This was one of the old ones that a lot of people bought at first, but then better ones came out, and Roundhill mainly came out and did a lot better. And so they've adjusted this several times. But anyway, these are ahead of Roundhill on the list, though. But Roundhill will be somewhere in here, too. YQQQ, I have like 17% of my portfolio on that, or 12% of my portfolio on that. Big Y's a monster. 10.6% yield, 2%, positive NAV return, about as stable as the SPY. SPY-T, FAX, and their CAIE. CAIE is 1.4 times as stable as the SPY, so that's fine. It has market stability and then some, 12% yield, NAV steady as a rock. But there's a lot of good choices in there. You could say that about some of these other funds too. Big Y is a good one. SPY-T is one no one ever talks about, but iSPY is a great one. JEPQ is one that a lot of people like. What's RIV? I'm going to have to look that up. That's some closed-end fund. I probably got that from Brad. Brad, that one night, I don't know if you were here. You had too many. I couldn't put all those in there. So I just sorted it by yield and put the top 10 yielders in there. Some of those are probably dogs, but I got some good ones in there. I put the ones in there by yield, and then I put the ones in that I've heard of before. I've heard of, and there's one called B something, and there's some big ones that I kind of knew of because I hear you guys talk about them. River North Opportunities Fund. Wow. So they probably take on distressed debt. I'm thinking usually opportunity means we're going to buy. I'm thinking, and yeah, they're talking about a rights offering closed-end fund. I'm just guessing it's distressed debt or, something like that. Anyway, it could be, but that's cool. That's a good one to know about. Stable. Once again, though, these stable ones are almost always, there's two themes. They're either based on bonds, or they're stock indexes, but pretty low paying, 12, 8, 10, that's why that one was at IVVW was editor's choice because it yielded 16. But so that's kind of the common theme. And the reason that happens, I guarantee you, every one of these funds is a monthly buy right fund, the covered call ones, IVVW. They're at monthly options. Nothing wrong with monthly options, but you get less yield and more stability. All right, so that's good. I knew CAIE would be in there. I just don't know why I can't pronounce it. CAIE. Yeah, no, it's BTEC. There's one called BTEC, and then there was one called STEC or something. I mean, but anyway, yeah, JBBB was not on the radar. Like I say, I'm afraid if I put too many closed-end funds in there, it'll just be all closed-end funds, and I can't really add much value to those. But I want to compare them, and I know you guys like them, so I'm probably going to keep them in there, but then separate them out and have them on their own night. But if one of them gets up to the top of the max factor, I'm not going to take it out. But I didn't want to put 400 closed-end funds in there, and then, I mean, just because. But I'll make their own. We'll make their own database. Okay, you play the Charlotte 49ers. Who are the Charlotte 49ers? I mean, the SEC, sometimes they play like an easy team late in the season. Like I saw today, LSU or somebody had anyway. So yeah, that's your easy. I guess that's almost like a bye week. I don't think the Charlotte 49ers are going to be able to compete with the Georgia Bulldogs. Anyway, nice little trip. If you have to just go right up there to Charlotte, they probably get a nice check for playing you. It's a good deal for them. It's a great deal for you because you guys get an easy win and get to rest your players. Howdy, Bon. How are you doing, bud? I don't think they'll. Okay, good. I'm not trying to predict that. Hey, Udar, get this. I was looking at my first video tonight. I hit my 2-year anniversary on the 12th of influencing, and my first video was so bad. It's not as well as I could do it now, but I had no idea what I was doing. But I was looking through my comments, and Rod was my first comment. But then, but you commented, you left me a nice comment. And anyway, trying to think who else was in there. I don't think any of you guys that are in here now was in there. Okay, so Udar is okay. What are you saying here? You keep hearing is bubbles don't happen when people. Yeah. True. I heard that. I think I watched that same interview on CNBC, but okay. But wonder if like 2022 happens to the market. It's not a bubble popping, but sometimes the market will stop and go the other direction for 6 months or a year. Wonder if we get in something like that. That the 2022 was inflation induced. It was an inflation induced bear market is what they call it. So, I'm not saying that will happen, but it doesn't have to be a bubble. That could be if something like that happened, maybe something like that happens to Bitcoin. I'm not saying, but I'm not saying just like it's over and stuff, but I'm trying to avoid just a slow grind down also. Really, I mean, hopefully we'll pop soon. I mean, at some point down here, people will buy the dip. Where are you buying it, Udar? You're buying at 90. Okay. All right, I got you. And I know a lot of other people will too. That's the way the market works. It goes down until it finds liquidity, so. What about GPIX? It was on there. It was on there. You probably made that comment before you saw it. Soxy has done well also. Yes, correct. Yeah, I like the way Udar thinks also. We've always, like I say, you went to be one of my first commenters. You were like the 5th comment I ever got. I forget what it was. It wasn't critical. It was a nice comment. But anyway, I'm going to show that video someday and make some content out of it, and we'll look at the comments. I gave Rod a shout out. I was such a newbie. I didn't understand that no one's going to be watching. I don't know why I did. I say, hey, and I love these high yield funds, and I'll tell you where I get my information. At the time, Rod was there's Rod and Adriano, but I probably hadn't discovered Adriano yet. That were covering the high yield funds. Maybe Todd, I don't know. But anyway, but I saw at the end of my video, I said, I tell you what, if you want to learn about these funds, I always get my information from Retire on Dividends. But also I wasn't clout chasing. I didn't realize that he would see it and get me views. But yeah, I got like 4,700 views on that. Anyway, all right. So what do you guys want to talk about? I'm working on all kinds of other stuff. Let's look at Bitcoin again. Yeah, so let's look at it. Let's step back on a daily chart and let's get serious about Bitcoin here for a second. I wish I could make this go down. What is this? No, that certainly wasn't it. Yeah, there it is. Okay. I mean, that's just textbook. I mean, you guys know that's just a textbook pattern, but bearish pattern. We did the same thing here in March. We rallied up and hit the shorter term moving average. Now, we didn't even get enough strength to hit the shorter term moving average this time. It's at 111. But anyway, whatever. No two things are the same. But yeah, then what we did is we made a lower low, and it was our third lower low. So we hit 1, 2, 3, 1, 2, 3. It wasn't quite as sharp or whatever. I bet there's a gap there. I wonder if we were also feeling a gap. Probably. We can look over here. No, not really. If we get to down here, there's some type of low volume node. Anyway, whatever. But then eventually that was the low that took it back. So the next thing we're looking to do, bulls just need to get it over this trend line. And notice the longer term trend line was green the whole time, meaning the 200-day was sloping up the whole time. So that's an indication of a bull market or a bullish trend anyway. So especially if you're above a sloping up 200-day, that's just textbook. So anyway, hopefully this is the low, just like this was the low here. That was the one where everyone trapped the bulls. Then I bet a bunch of people sold and they were on the wrong side, and then they had to cover as it went against them, and it started a new bull market. So yeah, hopefully we hit it here soon. Let's look. I always like to look at the high volume nodes, and we're on one. So that usually you slip through the low volume nodes, or sometimes you turn around. But anyway, but if it falls, I'm thinking maybe 83. What I'm really thinking is if it falls, this low volume node, there's a gap over there somewhere. Yeah, there is. That needs to be filled, and that's right at 90. And then God forbid if it gets to 83, I mean, hopefully maybe it'll stabilize, and that will be the bull trap or the bear trap where people will get bearish and then have to cover when it runs the other way. Anyway, so yeah, I mean, it's awesome. It's awesome. You guys like my analysis? I'll go read the comments and make sure I didn't. About to hit the hay now. Grumpy, you have a good one. Talk to you later. Yeah, it's late for you guys. You guys can get out of here. Lots of times I have West Coasters, and then I have Michael on here. I'm out of stuff to talk about. I was going to show you some stuff I'm working on, and just take questions. But if there aren't any, we could just get back tomorrow. I'm working on. I've been promising you this forever. This Alti future value calculator, where we look at the market, what the market's up, and then what it predicts Alti's NAV in the future and stuff. But anyway, we'll do that tomorrow. But I have all kinds of cool stuff planned for you. There's a new ETF out called ONO, OHNO, and I have the prospectus. I'm going to review it. It's super technical. It won't probably be real interesting for you guys but it might be an interesting fund. It's a tail risk fund. It's a fund that you can buy that makes money if the market crashes. So, and it's a Matthew Tuttle. So I'll do a review on that. But other than that, I don't have anything to talk about. I just want to come on here and get this done. Gosh darn it. I just remembered that I forgot to, if Coach is still here, does this ever happen to Coach? I mean, if he's watching me, I always do a video and I forget to check monetize. Lots of times I fall asleep and I wake up the next morning and I had a great video, that was just unmonetized all night. I just remembered I forgot. Gosh darn it. Anyway, it's fine because we have 64 views. That's a lot of views. Hey, hit like, you guys. Subscribe if you don't. Hit like, and yeah, you guys can get out of here. And I'll stay around and answer questions. If I got any, I'll talk about stuff that I have going on. But the stuff I have going on is boring. Let's look at the diversified divas really fast for the West Coast guys. All right. These are total returns, and these are the funds that I think are the best funds out right now, the best class of funds. Best performers, QLDY. I like that. Worst performers, ULTI. I mean, tell me about it. Highest dividend is WPay. Now, granted, this is on like 9 days of data. So, but anyway, WPay is a good one. But here's the performance charts. SPY was down in the past 9 days since inception, 1.4. Qs were down 3. The ones that stuck closest to the Q was QLDY. I mean, that's awesome. It still lost a little extra, so it's not a hedge fund or whatever. It'll lose if the market goes down. And it's dependent on the market to go up for sure. I mean, but all of these are. Chippy's down. GPTY is down, but that's not too bad. GPTY is an AI, basically AI. It's like FEPI. Anyway, then WPay. WPay had a nice performance, and so did K-Yield from Howard. And then right behind that was ULTY. And then behind that was LFGY. And now we're getting into the rough territory. Once you're down double digits, and ULTY was down 12, I mean, in 9 days, that's pretty rough. But the market's been poor lately. But anyway, then we have LFGY down nearly 16%. Then we have Blocks, which is a great fund. I'm not saying anything bad about Blocks. David Nicholas, if you're watching, I mean, it has a lot of potential and it's made a lot of people a lot of money, but not lately. Lately, it's and then there's ULTI. So they post their trades over the weekend. I'm going to look at their trades. I'll do it after I get out of here tonight, and I'm going to have content on what they're doing next week. I'm concerned about this one. I mean, to be down, just think it's down twice. You could have bought twice as many shares of Alti and been up more. I mean, anyway, so that's that. But here's the dividends, and look at this. It's the AI is stupid. They did it on dollars instead of on percentage. My gosh, how stupid. Because anyway, those charts really aren't that good. Maybe we can look at it here. Dividends, yeah, they're doing it on dollars. Gosh darn it, these guys. Well, let's look at WPAYs. It's $1.14 on 48. So yeah, that's way better than QLDY's 56 cents on the same price. It's about twice as much. Man, that's really WPAY is a good looking fund right there. Of course, everyone knows Chippy and GPTY, and Chippy's paying a pretty decent dividend, not quite as much as WPAY. That's a great look for WPAY. Then we have K-Yield, not known for their dividends, but they are paying 16 on 22. So they aren't paying as much as GPTY. It's about half as much as GPTY. GPTY pays 50. So maybe these guys are averaging 25. I'm just doing the math really quick. Or no, they're getting 30, right? 30. They want to get 30 and they may go up towards 40. And I think GPTY gets more like 60, but I saw that it was, half of GPTY. Then we have ULTY, LFGY. And I mean, yeah, it's great that these things pay dividends, but they got to fix the NAV on these things, especially Alt-I. Blocks, we know, can go up. It can be up 22% in one day. Hopefully not really, but it can be up so fast. Hopefully Alt-I has the same ability. And LFGY, I don't know about that one. Although I had it and did well, but I also sold all of it about 3 weeks ago. And I bought it right after the crash. So I had perfect timing on it. So, but it doesn't look like it's really setting the world on fire, to be honest. So once again, this has total dividends, total return, but it doesn't have, I need to get them to make dividend percentage, but that's really all I have. I had that open just to show you guys if we run out of stuff to talk about, yes, I do think that. And in fact, but they only added one. They bought Google last night. And they did a Google collar, so they don't have unlimited upside. They have capped upside, and they didn't do the special little 3-leg collar they've been doing to reduce put drag. That's just kind of back to old ULTY. Google's a good one to have, though, if you think about it. I just thought about that. They bought it Thursday. No, they bought it Friday. I wonder if they knew about the news. I don't think that news about Buffett taking a stake didn't break till after the market closed. But those guys probably heard a rumor or something. But anyway, so the blue chips they have are Google, Salesforce, which is CRM, NVIDIA, and Facebook, Meta. And I think they have 5. And then they have another one, too, that I'm drawing a blank on. But anyway, and I hear they're planning to put more in. I heard they're also wanting to take to get more stocks. So, so in any event, they were having about 15 to 20. So maybe they'll have about 25, and that'd be great. Maybe if they could put 10 blue chips in and maybe you still have to have, the problem is these blue chips are going to make the yield go down. You might as well get GPTY at some point. GPTY is paying 50 or 60%. And, GPTY is a better fund. Especially lately. But to be fair, they're based on different stocks. GPTY is big tech, and Alt Y is more like Russell and small, smaller companies, riskier companies. But it gets higher yield. It pays 80 or 90, 70, 80 or 90, where I think GPTY pays 50, 60, and 70. But still, it's in hindsight. I also sold all my GPTY and did really well in it. But I sold it 3 weeks ago before the market started pulling back. So let's look at GPTY and ULTY. Go since inception. They both got hurt and pulled back, but ULTY missed the last run up as well. And GPTY caught another leg in it. But other than that, they were the same. And GPTY pays a bigger dividend. So GPTY is impressive. So what I wanted to show is let's look at ULTY compared to, they have a lot of Bitcoin miners and stuff and meme type stuff that's related to Bitcoin. I bet IBIT. Well, let's see. Let's see how it looks compared to IBIT. All I was trying to show, IBIT's killing it. All I was trying to show though is crypto made a new high right here. I think that was like October 5th or something. And then when the market made another high later in October, Bitcoin did not. It made a lower high, and then since then it's turned down. But so it's, not good on either count. All right. So what else do you guys want to look at? Did they purchase some? Yeah, so they did. I answered that. They have 5 of them. Hopefully they'll get more. Yeah, if they purchase too many, the yield will drop. But if you just have a couple of things like they still have, Palantir's their other mega cap. But if you just have a couple, the yield will drop. But yield and NAV, it doesn't matter. In the max factor, it doesn't. They're both good. But you don't want to get so much yield you don't get any NAV. Has that been what's happening? That's maybe part of it. The other part of it is they're heavily into Bitcoin. Bitcoin's pulled back. But if they could stabilize the NAV, that would make it, then they wouldn't have to pay as much yield, right? So I hope they buy more quality stuff too. And I'm going to be tracking it on a daily basis. They did make money on Google. And those puts and stuff, go watch ETF Inspector if you guys don't already. They've been killing it on the puts lately too. And I know that's, but there's lots of put trades. They make, $3, $5, $6 million rolling the puts down and stuff. Now, having said that, they own the stock, so their stock is down 3 million, so it's not a great time, but that's why they don't go down. That's why they didn't go down 25% like Alt I did. Alt I has no protection. ULTY actually has pretty decent protection. So anyway, but a nice balance would be nice. Absolutely. And here's my 2 suggestions though. If they're unable to reach that nice balance, but you're still interested, but you still need a yield or something. There's not a lot of difference between GPTY and ULTY. I didn't realize the yield's pretty close. ULTY yields about 20% more, so it's not pretty close. A GPTY just does so well on, because they have blue chips. So I'm saying a frustrated ULTY investor might prefer GPTY. So let's compare GPTY to FEPI. FEPI's a good one. Same types of stocks. I was trying to make an apples to apples comparison. Yeah. GPTY pays a higher yield than FEPI, about twice the yield of FEPI, and they spank it. They're beating FEPI's butt right there. They're the curb stomping FEPI. So that might be a good alternative for people that are disenchanted. I get the reverse split and stuff. It's not fun, but the good thing is if you don't want that to happen, it doesn't happen until November 28th. So Anyway, FEPI could be a good one. But then also, if you want super stability and you don't care about a big yield, you want a yield, but you don't care about a big one, big Y. Let's look at big Y compared to FEPI. Now, it looks like big Y just barely beats FEPI. GPTY is a lot more impressive because big Y only pays 12%, whereas GPTY pays a lot more than that. I mean, why did I sell GPTY? Oh my gosh. I sold GPTY and loaded up on blocks and WPay, which are good funds, but I mean, it was the wrong time and they've both gone. Anyway, yeah, big Y might be a good one to consider. I mean, heck, big Y, can it beat SpyEye? Probably not. SpyEye's a monster. I mean, yeah, SpyEye gets it, but I mean, 38 to 41. They're close. And if you look, big Y was beating it all year. It just passed it lately. I mean, that's a good look. And then, but then if you to be fair though, if you reinvest, SpyEye, that's, SpyEye is a great fund. So it's no embarrassment to be beat by SpyEye. Let's look at T-Spy. T-Spy is another great fund. Yeah, no, that's a good look for big Y right there. It looks like big Y won't go down. I mean, I know it does, but you know what they do? They don't sell all the options they can because it's a target 12 fund, and they use monthly options. So they use monthly options with a partially uncovered portfolio. So for people that, don't like Alt-Y, and I get it, big Y and GPTY might be options for you. So, and of course, SpyEye and QI. You guys know all the good ones, but those are good ones that a lot of people don't talk about because a lot of people just hate YieldMax. Not all of the YieldMax ones are bad. I mean, as you can see, those are actually awesome. Hey, thank you very much. All right. So guys, I'm gonna let you guys go. You guys have a great day. We've been going for an hour and 11 minutes. I thank you for being here so late. It's after midnight. I will talk to you tomorrow. All right. See ya.